Did you say you do development as well?
I love the game of Monopoly and this idea of taking 4 greenhouses and trading that up for one red hotel. And so not only did I get fired or laid off, they took my light rail pass, and so I had to call my 8.5 month wife, pregnant wife, to come pick me up from work, with a box. It didn't make sense for us to leave renting and go to ownership, but it allowed us to, rather than investing into, putting all of our money into rent, put some into an asset that was putting money into our pocket.
If you could look back and tell your 27-year-old self some advice.
Yeah, no, lot to unpack in there, and it's never a simple answer.
Welcome to Built to Scale. Today we're sitting down with someone who's blending creativity, design, thinking, and investing into a roadmap young entrepreneurs can actually follow. He's an architect, real estate investor, co-founder of The Root Team, and host of The Radical Hospitality Show, covering everything from investing to creating spaces that actually matter. Welcome, Zeke Freeman, a man who's built a business with his wife, built a portfolio, built a brand, and he continues building every day. Welcome, Zeke.
Quinn, hey, so good to be here. Thanks for inviting us.
Absolutely. So kind of want to go back to like the story on how this all started for you and kind of like unpack your journey for our listeners. Like take us back to day one, before the first property, before the business. What was the exact moment you realized I'm going all in on architecture and real estate?
Well, I was a wee lad, and I won't go for that far back. How about I'll take you back to like the probably the point of failure, which I think is often kind of the pinnacle to start realizing you got to do something more and move forward. So
You said
what I
failure?
often think about is in 2008. I was a young architect. I was working for a firm and really putting all in, doing the W-2 thing and working my way up a W-2 ladder, staying late, probably the best designer I thought in the group. And then 2008 happened, and the industry really just shut down. And so overnight, I was working on a high-rise hotel for a big architecture firm, and that project, along with a dozen others in this studio, just got shut down. And so a lot of us in the industry just found ourselves looking around with no place to go. And my wife at the time was not 8 months pregnant in 2 weeks. So, we were getting ready to have our second son. And I got the notification that there was no longer a job opportunity for me there at that firm. And so I got handed a box, and the worst part about it was I used to work in downtown Denver, and I would take the light rail all every day to get there. And the company, one of their perks was their light rail pass. And so not only did I get fired or laid off, they took my light rail pass. And so I had to call my 8.5 month wife, pregnant wife, to come pick me up from work, with a box. And so that was just like this moment of like, man, I'd worked so hard. I'd gone to, I did everything right. I, did good in school, got into college, did a architecture bachelor's and then a master's degree, got good grades, got a good job, and thought things would be stable at that point, and realized just real quick like how little control you got unless you're actually owning your own future destiny. So that kind of moment kind of set into place like a path that you know we are all responsible for our family and the work that we do. And I began to go down the entrepreneurial journey at that moment of, how do I begin to not rely on another business owner or company to support me, but how can I support my family? So
Still coming up.
So
at
what are the
liability.
three questions again that you do to each person in the all team
So,
meeting?
yeah, every morning it's
SoCal homeowners, why pay 15, 20, or even $30,000 for a new roof when instead you can get a new roof for only less than $100 per month? Here at Master Roofing, we serve homeowners with high quality roofs with no hefty upfront costs. So give your house the roof it deserves with zero down and low monthly payments. Why wait? Click the link below to get you a roof you deserve for payments you can afford.
Yeah, so I began to look at what does it take to really build your own firm as an entrepreneur, and so I did take another job right away. But in taking that job, the key thing I knew that I needed to learn was sales. So as a business owner, like you master your craft, whether it's doing roofing or
Mm-hmm.
architecture or construction. But it's really the ability to be able to sell your own skill that makes the biggest difference in being able to run your own company. And so when I came onto that next firm, I asked if I could get involved and learn business development. And so while I was working for this firm, I began to learn about networking, learn about marketing, learn about just really building those connections, so that when it was time, I would be able to bring in my own work and hang my own shingle. And so over the period of like 3 or 4 years, um, I kind of took that one step at a time. And the way to not compete with the architecture firm that I was working with at the time is I really started to look at development as a way to do some of my own projects without competing against the firm for clients and their projects. So, and I still do that today. I think, being able, like we all, there's tiers of building your business and your wealth. One is learning a great craft, and two is being able to pull some of that extra income that you're making and put it into assets. And the natural inclination as an architect or people in the construction industry is real estate. And so I've begin to study that a lot, and begin to put together deals and pitch opportunities on the side to other developers that would bring in architecture work.
Mm-hmm.
Um, at first, that was just kind of slow going. Without real experience or reputation, it really takes um, you know looking for creative ways to get in and partner with people with experience. And so in about 4 or 5 years in of working with this other firm, I finally got some roots on a couple of development projects, and they were single family fix and flips. Um, I ended up working with a developer that had some duplexes going on, and
Mm-hmm.
so I was pitching, our projects, and he was like, "Well, this is great, but you don't have experience to do that. Why don't you come? And I've got some projects going. You can construction manage those." And that really gave like the experience to be able to work underneath a developer that had experience, learn about what it takes to put together a deal, takes to put together capital, and get some ground experience on the construction side as well. So that opened up a door to hang my own shingle. Started doing some projects for this developer, and then started looking down the path of uh, hanging my own architecture shingle as well. That was kind of the skill set I had. And bringing along sales and learning how to do marketing really enabled me to start to build a firm. I joined a group called Architecture Marketing Academy, and learned some of the basics of like newsletters, podcasts, networking, and that over time just began to grow a firm. We began to get a reputation for good design work, bringing in developers that were solving problems for helping them find deals, and slowly we began to do our own deals within that as well. So that's been a journey. We started that in 2012. It's 2025 now. So 13 years later, we're in the middle of a boutique hotel development, a 22 unit development, and that's just one day at a time, putting back a little bit, scaling up the projects that we're doing both for ourselves and for clients.
Wow, man, that's a lot to unpack there. So you started out as an architect for skyscrapers, right? Is that what I understood?
So I was working for a architecture, a larger architecture firm. It was Oz Architects, and we happened to be working. The project I was working on was a skyscraper. It was I think it was a 15-story hotel in
Yeah.
downtown Denver. Um, that project in 2008. Uh, we were right in the middle of it, and a couple others that just got
Yeah.
shut down.
That's a pretty cool it's pretty it aligns with when I was younger I used to build Legos and blocks and stuff, and my dad used to always say, you should be an architect when you grow up, because of how you can just your creative mind. So I'm sure having that experience working in that field, that there's a ton of creativity, but then you were able to kind of take that, and then with all the job not working out and things happening with the economy, and then that just turned into new opportunities. And now you look at you have your own small skyscraper boutique hotel, right? So it's
Well,
like it goes like it's just slowly you start to build on those steps. I love the development aspect too. You said you were working with, like, as you started to get into these deals and stuff. Do you guys do did you do say you do development as well?
yeah. So our primary focus is architecture work for other clientels.
Okay.
But I love the game of Monopoly and this idea of taking four greenhouses and trading that up for one red hotel. And so we've just been on the side playing that game for the past 12 years. Is we will work on a house and fix it, flip it, sell it. Um, and that's giving us experience in we've tried to do projects that are similar to what our clients are doing, so we understand their pain points. So it's building the architecture business, as well as that's really building you know our long-term wealth along the side.
How did you do that, like, first? I guess, you talk about, like, you work for money, and then you need to make your money work for you, right? Like, at, like, maybe, like, what age were you, or at what point like, what was the time when you're like, okay, we're actually gonna save money and put it into an investment, and we're gonna, like, start investing? Because I think a lot of people think about it for a long, long time before they actually take the jump. I'm curious to hear your story on that.
Yeah, I mean, so when I was in the middle of architecture school, I read Rich Dad Poor Dad, and it's kind of the classic book that really helps people do a little bit of a mindset shift from this idea of working for money versus getting your money to work for you, understanding the difference between assets and liabilities. So really, from I'd say in college, I began to understand and look down that path. Um, I think there is this, which is great, and I think that's a path to go down. I think some people discourage themselves about, well, and I know I did, like, I'm just working for a job versus, hey, really, a job is a great place because you're learning skill sets and someone else is paying for it. Um, and you know, it was always my intent to be able to go do these kind of projects, and it felt frustrating to watch these guys that are doing developments at a larger scale early. And I think if I were to go back and tell my younger self, like, just take the pace and it's okay. There's scales to investing in development, that it takes learning to do work, and then learning to save money, learn to turn that money into investments that is working for you. Right now, I'm kind of on the backside of, like, now just learning to do lower scale things that are a little bit more liquid, like gold and Bitcoin and stocks. I was always shooting for the bigger projects in real estate, and sometimes those are more difficult because it takes more capital to get up to the doing real estate. Most of our clients have taken years of doing the same thing, working through getting a doctorate degree, putting together money, being able to save that, invest into real estate. And so it takes some time. One of the things that we did that helped kind of shortcut and get into summer real estate is we did a lot of house hacks, where we would live in and renovate it and sell it, and so that kind of helped along the way and journey. Um, but it's a process.
What's your like take on like stocks investing in like Tesla, for example, or like, Apple versus, getting into real estate?
If you would have asked me like 5 years ago, I'd say, yeah, I don't trust stocks or the market or anything. It's all controlled by Wall Street, and it's for Wall Street, and I still partly agree to that. But I do think there is liquid assets, and you need those to be able to do real estate. And so whether you choose to, you know, the worst thing you can do is, Rich Dad always, Robert Kiyosaki always says that, savers are losers. And he's just talking about, our cash because of appreciation is losing its value. And that's true. Um, but the reality is you can't go from no cash to doing real estate very easily, especially today. And so, taking your cash and putting it into areas that will grow and appreciate is much easier to do that in things like stocks, gold, Bitcoin, and you can begin to build up a purse that you can then utilize and leverage up into larger things. So I think it's yes and it's interesting to me how all forms of investing really come down to understanding business, which what you and I do. It's whether it's running your own business, you're looking at a profit and loss sheet and understanding how things are managed well. Well, that's all you're doing when you're investing in Apple or some of these other stocks. You're looking at businesses and understanding, are they ran as good quality businesses? Are they producing profit that then you can share with other people? The same things happens when you start to get into real estate. Is you know especially when you get into syndication, is can you produce enough value in what you're creating that it's going to have offset that you can share with other people. So I think they all go together. It's all about increasing your financial education and understanding how to put the pieces together. And I think starting in liquid assets is actually a pretty good place to start, and then quickly learn to invest in yourself, invest in your businesses, and then invest in the real estate going up is kind of our path that we follow.
Interesting, and I like I like how you broke that down about like savers are losers, right? And it's like, yeah, you're losing because of the continuous appreciation in the market. So the dollar's not going to be worth the same in a couple of years from now, right?
Oh, yeah, absolutely. And so, you know, really, it's about are you like money is meant to create velocity. It's meant to be used. It's not meant to sit there. And so, you know, if you're saving money, one, it's losing its value, but two, money's not meant to sit. It's meant as gasoline to put behind you know our creations, our entrepreneurial ventures. How do you use that to then create something that's of value that you're giving back to the world? Whether that's a business, whether that's investing in housing, it's just a tool.
So for a young entrepreneur out there listening right now, can you break down the step-by-step process on somebody who's interested in real estate to actually buying their first property?
So different paths for everybody. I can just share what my path has been. I think especially today, the first place to invest is in yourself. Like learn a trade or a skill set. If you can get that trade or skill set adjacent to real estate, and there's so many places around real estate, whether that's as a trade, electrical, plumbing, mechanical, roofer, uh, builder, realtor. There's a lot of adjacent skill sets that if you're interested in real estate, you should learn a skill set so you're actually having something that you can show up and add value to. The reason that developer chose to invest in me is because I had a skill set that I could offer him, architecture. Um, Real estate is like it's the destination, it's not the journey. You've got to get in and understand it's not this passive thing, it's this active thing. And so I would learn the skill set, choose something, build a business around it, and then as you begin to become adjacent to real estate, understand how to add value in the process, look for mentorship, that then you can begin to, as you're creating a successful business, pull some of that equity cash aside and begin to look to ways to participate. Um, you know, your personal residence is a really easy one to step into, especially if you look at your personal residence not just as a liability that you're pushing money into every month, but actually as an asset. How do you convert that into something that's putting money into your pocket? One of the best ways to do that today is house hacking. And that's simply just getting a house, fixing it up, adding value to it. You could rent out a room. What we've done is we've purchased an adjacent property. We built an ADU that's a cool tree house. We rent that out so that every month that's putting money back into our pockets. A lot of markets now allow for ADUs on single family lots, so it's a great way to add on. It's just sitting in Jefferson County's short-term rental regulation board last night, and they're talking about allowing ADUs now in the basement, and that can allow for a separate entry. It can allow for additional cash flow, and in some cases are allowing those to be turned into short-term rentals. So there's lots of creativity that can happen in real estate. So there's no this is the one path. I think the key is create skill sets that add value. Once you're adding enough value, begin to store some, pay yourself first and begin to store some of that up, and then look for ways to then step back in so that you're getting your money to work with you. And that can be in stocks, bonds, real estate, or any other investments. But you got to get that money to work so that it's adding, creating value. We usually try to do projects that then start to complement. If you're in an adjacent field. So when we did the Red Hotel, my wife's in real estate, so she's adding value doing that. She helped find the land, took a commission for that. We designed the hotel. We took an architecture fee for that. So there's ways that then you can use your skill sets to also double leverage and be invested in. So not only can you bring your capital, but maybe you can bring your skill sets as part of the equity contribution into larger projects. So it begins to snowball after time. And you just got to continue to work that snowball up the hill.
So when you're so obviously you said learn the skill set, learn the trade, from there go into, make some money with a business or a trade that you're working in, save that, and then, start looking for ways to get involved, and then get involved and start with your own house, and then maybe start making income from your house with an ADU. I have a question for you. So if like, for example, I did a podcast recently with a mortgage broker. I did the pre-approval process. But I didn't really have a lot of money to put down. So it's like a seasonal business I'm in. There's times when cash is heavy and cash is light, right? Because of the rain it went with roofing. And so I was approved to buy a property, which I think it was around like 1.5, 1.6, and they were able to basically finance almost 99%, 98%. Like I would only have to come out of pocket very small amount because they had a program for the down payment, they had a program for the closing costs, and they had a program for the first time home buyer loan. Would you recommend? Okay, and so let me give you an example I'm in. So I rent right now. I pay around $6,500 for my rent plus utilities, so $7,000 a month just in rent throwing away every month, right? My
Wow.
my wife and I said, hey, you know what? Let's go ahead and move to another building that's less, because it's still a nice new building, but we can save $2,000 a month and have that extra money because it's not necessary to spend all that money on rent. So when we looked at those numbers for the real estate deal, it was like 12,000 a month with the PMI, with everything, right? But then you get like the interest write off and like other benefits, right? So the mortgage broker was kind of explaining that it's going to be, at the end, still kind of like I'm going to be at the same of what I'm paying on rent, but then I'll have like an opportunity to um have all these other benefits from the real estate side, right? Tax wise and stuff. And then my goal was like, hey, if we can buy like a duplex or a fourplex, we can rent out one unit that will cover part of it. But then when I started doing the math, it it didn't make sense because I'd still be kind of paying the same. Then I'd have all the home upkeep and home maintenance. And if there's a roof problem or there's an AC problem, I'm going to be responsible. So I kind of shied away from doing it and said, hey, like I want to wait until I have more cash to buy it instead of over leveraging. So in when I give you that drawn out example, like from your real estate mind of the deals you've done, what do you think about that? Like, would you want to get into a deal like over leverage right now at high interest rates, or would you rather focus on the business, save up some cash, wait till you have enough of a reserve where it makes more sense and rent for now? Like, what's your honest perspective on that? If you could look back and tell your 27-year-old self some advice.
Yeah, yeah, no, lot to unpack in there, and it's never a simple answer. And and the market's a really difficult situation right now, where things are pretty unaffordable. So it's gotten harder, but that doesn't mean it's not possible. It just means you got to be more creative in what you do. Um, so if this were me, and that's the only place I can really kind of give some advice from, or thoughts from, what would I do? Um, one, you gotta spend less than what you're making, and so I would just squeeze it down as tight as I could. How do I get my costs down to where I'm not living above my means, and so I've got more that I'm able to put back, and that can be difficult. Um, and then I'd go hard for a season. Like life is really just about different seasons, and you realize that as you get further out, that those seasons aren't forever, and they shift. And so you kind of got to sacrifice the comfort of now for tomorrow. And that season may be a year, 2, 3 years till you can really one is the equity that goes into buying real estate. And so putting back and being able to save for that is one piece of it. um, you know Two is, as your income increases and you're growing your business, which is exactly what you should be doing, like building the built to scale, growing things up, is don't let your lifestyle creep up with your uh, with your income. Like, just be willing to hold it for a season. um, and there's always going to be, like you mentioned, the difference between renting and owning. um, you know so renting is not the worst thing in the world if you are also able to invest in real estate. And I'll give you an example. So when I was going to college, I got a job as a property manager, and so I worked taking care of the property. We got an income from taking care of the property, and then we got free rent, quote unquote free rent. But essentially, I was paying rent. It wasn't my home. I got a lower salary because of it. So essentially, I was paying rent to stay there. But we had our houses covered. This could be equivalent to someone who's got a good job. They're paying rent, and then they've got their bases covered. Rather than us going and buying a personal house, we went and bought a rental house. So we went and found the cheapest thing that we could afford. It wasn't something that we would want to live at. That was something I had to kind of get our mind out. Like, a rental house isn't something that it may not meet your standards, but it's going to meet somebody's standards. And so we bought a little 1 bed, 1 bath for $80,000. We put down $7,000. We went and ripped the roof off and put a new roof on it, and rented that sucker out for a couple of years. We were young and poor. We didn't have any money, and when we got to where we needed some money, we turned around and sold it. I wish we would have held on to it. It's double in value now, but it still got us into the game. And so that was a creative way to. It didn't make sense for us to leave renting and go to ownership, but it allowed us to, rather than investing into putting all of our money into rent, put some into an asset that was putting money into our pocket. So maybe that's a creative way to do it. So it doesn't always have to be home ownership. If it's your personal home, it's still a liability unless you figure out how to turn that into an asset that's putting money into your pocket. So, I'd say, I would push my rent down as much as I can so that I can comfortably afford that investment. And maybe you still get to live in a nice place and you can buy something that's then putting money back in your pocket. Be a great way to do it. And then maybe when you get to a place that you've got enough put back, and you want to hop into that duplex situation, that's a great way to do it as well. With a FHA loan, you can still put down, usually it's 5%. You were saying 1%. Sometimes there's those, opportunities to do it. And then if you get into that larger real estate, I wouldn't just do it to be in real estate. Like you say, like make sure it cash flows and works. It's cash flows king. You can discount the cost of what you would be paying rent. So that helps it make it a little easier. The goal is not, if it's your personal residence and hacking, you're helping to bring down the amount of money that you're throwing away each month into rent. And so, a duplex, fourplex, a basement rental is a great way to do that. And you're still winning. If it was costing you $6,000 a month and now it's only costing you $2,000, well, you just saved $4,000 a month. So you're working up that cost equation. And then you mentioned benefits. So there is huge benefits, and I do feel I've got two young boys right now. I've got a 17 and a 19, and and I know a lot of kids that are in their 20s that are getting started, and it's really hard to get in. If you have not gotten started, it is really detrimental. A few years down the road, most people who got into real estate didn't save up $100,000. They got into that first crappy house, and appreciation did the work for them. They renovated it, and all of a sudden you look around, 5, 6, 7 years later, and that's where they got their deposit to then roll into the next project. Or if they're super aggressive, they're fixing it up and selling it every 2 years. But I think that's really the benefit and the superpower of real estate is, one, it's gonna help you cut you're making money in real estate in a few places. One, when you're paying money to pay down your mortgage every month, that's numbers coming down a little bit, but it's not a huge number, especially in the beginning. So the delta just on that piece between rent and ownership is not always huge. Where the real benefits happen then become in these second and third layers. So secondly is taxes. So if you run your business at, every year, if you're making profit, you're looking for ways to bring that profitability down on a taxable income basis. And so you can depreciate the asset, and that just means if the government looks at that single family, that has a lifespan, they'll let you subtract and depreciate a certain percentage of that every year. You can deduct your interest that you're paying. And so none of these things you can do with rentals, but you can do with your personal residence or with an investment property. So taxes are a huge benefit in this. And then appreciation is kind of that third layer, where by owning that real estate, even if you only put down that 1% that you're saying, and let's say that piece of property that you put down, let's just call it $10,000. If you invested that $10,000 in the stock, and maybe you got 10% appreciation, and so it's making $1,000 a year, that's great. But now you've taken that $10,000 and you've leveraged it by buying, let's say a $100,000 property. Well, now you get the appreciation of that $100,000 piece of real estate at that, whatever it is, 4, 5, 7%. Sometimes it's higher, and so you're getting the full value of appreciation on that larger number. And so that magic really helps, over years to accumulate larger wealth and then snowball it into the next thing. So lots of benefits to get into, your own residence. If you can't, definitely look at ways to stash up and to get into rentals as well. And then our love as architects is then how do you supercharge that? By using your own creativity to design, renovate, force those values. Most properties that we've ever got involved in all properties that we've helped clients is, then you look at it and you say, okay, what could we do with our own creativity to add square footage, increase the value, and those are things that you can do, right away. Like with this house, we did a 203K, so we bought it, and then we immediately took out a construction loan with that, kind of packaged in um, with the purchase. So it's a purchase and construction loan, and then we immediately started renovating, this house and adding on to it with that same loan. So there's a lot of products out there that you can, not just buy the house, but buy and get the renovation or addition loan packaged into it, and that can really help, be creative when you're looking at a property to say, how do I force that appreciation? So, long-winded answer there.
No, it's a lot to digest, but I understand what you're saying. How do you so when I've looked at properties, like it's like so hard to find one that actually cash flows, right? I heard Dave Ramsey like making a joke on Instagram. It's like, hey, if you buy a house cash, it's gonna cash flow. You know what I mean? But when you have all the debt on it, when it's leveraged, at even 20-30%, like it's sometimes I don't know if it maybe just it's looking through a ton of deals to find the right one, but a lot of the time I find that it's barely breaking even or just covering the mortgage payment versus if you're putting down a bigger chunk because then there's more room. And I never really thought about that piece before because I didn't get that far along in the process. But it's like the more you leverage it, the less it's going to cash flow, obviously.
Yeah, yeah, and the more difficult it is to be able to find something that's gonna be able to cash flow. So, Dave's right. The more you put in, the easier that equation should be. And so, oftentimes, you kind of want to look at different metrics like cash on cash return of, if I were to put this same $10,000, uh, you know, in say a stock portfolio, what type of cash on cash return am I going to get versus putting that into into real estate. Um, and generally you can like Dave said, you can make anything work if you pay cash for it. There's a lot of power in that leverage, and so but there's also it's like playing with fire a little bit. The more you leverage, the more risk you have. Um, you know, so finding a balance there where you're not over leveraged and end up in trouble is really part of the game and understanding how to get into real estate. With your personal residence as your first project, um, it's a little it helps de-risk that because
Mm.
again you don't always have to positive cash flow. You're just trying to bring down the amount that you're putting out every month to cover your shelter. So it's a good place to start and just have a basis to understand. Then when you look at other real estate, you can begin to compare it to that. If you're not living in it, then it really does absolutely need a cash flow. And so, um, you unless you're playing for long-term appreciation, but especially in the beginning, it's kind of a dangerous game. It's like how long can you afford to carry something that's costing you money every month versus how long can you afford to carry something that's putting money in your pocket every month?
Just to touch on team building a little bit, like you're obviously running the boutique hotel now. It sounds like you're still doing stuff with architecture. Like there's a lot going on. So how do you do all this? Like when did you realize you couldn't do everything yourself and maybe started building a team? I'm sure you have a lot of different people come and clean the rooms for the hotel, and I'm assuming you don't do all that. So how did you build your team, and how did that all start, and what did that look like?
Yeah, so I mean, it really started with the architecture business, um, and the first thing in creating a valuable business is getting yourself out of it. Like we're usually the ones as the business owners that are getting in the way, and so to do that, you really have to look at what is it that I'm doing, and how do I teach somebody to do that with the same quality and consistency that I am. And so that comes along with like creating systems. And so one of the first things we begin to do is just, in architecture, there's a process. You take in there's a process for bringing in clients. There's a process for interviewing. There's a process for then going through concept and feasibility. There's a process for designing and documenting. And so we use Asana, and we just for every one of those different processes, break those down into checklists. Step one, da 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 da. Step two, and
So all your SOPs are in Asana?
so yeah, and that's and been there's lots of different platforms to put it in. Asana has been an easy one for us. So we have one section that's our project manual, for everything and standard operating procedures. And in that you can, we'll throw in Loom videos, and we'll link to Dropbox examples. And then what I do anytime I bring on a new team member is, we do the first 2 weeks, we call it Root University, and we'll go through each of those processes. So I'll meet with them 3 times a week for the first 2 weeks, and on each of those days, we're gonna go through one of our standard operating procedures and have a conversation about it. I'll show them the examples. They'll have the checklist. They'll have videos to go back and look at. And then they go and practice a little bit and try some things, and I give them a task, and and I give them feedback. The other big thing, so most of our team is virtual now. I've gone through, having a big office and overhead and, in-person staff, and compared that to the remote staff that we were working with at the same time. And it was just, a couple things happened with the remote staff. It was, one, I was getting longer retention because people liked the ability of flexibility. I was getting, mothers and professionals that, may had things in their life that required a little bit more flexibility. And so the longevity of those employees was longer over here, and it cost us less. And so I just shifted everything, to remote staff. And then for on the ground architecture, it's more on a commission basis. So our other principals, they eat what they kill, and we bring it back to the team, and we've got a remote team that helps get things done. So that's kind of how we're set up. What we do to keep the ball rolling every day is we follow some of the Rockefeller habits, and we do a 10-minute huddle every morning. So at 8 o'clock, we get in, and we go over what were your wins yesterday, what's your high priority today, and just go around the team. So there's not these and what's your bottleneck. So often they need a thing from us to be able to keep things moving along, and so that just keeps the balls moving. And so you don't go a week without seeing somebody. It keeps an efficient team, so everybody knows what they need to do. And then we have other tools for like project management.
So what are the three questions again that you do to each person in the all team meeting?
Yeah, every morning it's what were your wins from the day before? What's your priority for today? And do you have any bottlenecks? So I threw in that last one of bottlenecks because I found, oftentimes a team member, would hit something, and like they needed an answer from me or for somebody else, and they may go a day or two and not get anything done because there was a bottleneck. And so just having that piece in there of like, hey, what's keeping you from getting your stuff done? So we crush that right away.
What were your wins? What's your top priority today, and what are your bottlenecks? So do you do this like in an all team Zoom then with everyone, and just go one by one so everyone hears it, and it's like accountability too, and for the priority, that's awesome. I love that.
And oftentimes it's like, hey, Carlos, you need to talk to Dulce. We're not, this is not like a long. I hate meetings where you're wasting time. So if someone starts going on a tangent, it's like, hey, why don't you guys sidebar that and do a separate meeting? So lots of times it's just connecting up who needs to connect and getting yourself out of it. So that
I love it.
That 10-minute huddle, and we keep it to 10 minutes. We got a group of 10 people. It's like this isn't chat time. Like we got things to get done.
Cool.
And then we do a longer meeting once a week. And
love it.
So in our longer team meeting, we try to touch a little bit more on creating that company environment. So we'll usually start off with culture. Yeah, thank you. We'll start off with a question that's a different question every week, and it's a little bit just to kind of hang out and get to know each other a little bit more. So that team question, it might be, hey, what's bringing you joy lately, or what are your goals coming up? So we'll do one team question. I'll go around, talk through that. Then we'll do one. And it rotate. These other two rotate out. So somebody's in charge of the team question. Somebody's in charge of what is a pin up on a project that you're working on. So we like to everybody see what's going on. So we'll have one person do a pin up on a project, get feedback, and then we'll have one person do a lesson learned. So, hey, what's a cool thing that you learned in Revit, or productivity tools, or AI? And then the third thing we do is we use forecast, and that lays out the next 2 weeks. And so we always want to be looking out 2 weeks ahead of, hey, here's the projects I'm working on. I think I'm going to need, 8 hours on this one, 2 hours on this one, 4 hours on this one. Hey, I need Carlos to do some renderings. Can he help? We'll add some of his time, and we'll mix up, during that meeting, kind of a live, forecast for the next 2 weeks. And it's the best shot. So we're looking 2 weeks ahead in a longer team meeting, and then we're taking, just priorities for the day every 10 minutes. And that just keeps all the balls rolling.
That's huge. I think that you're doing like a lot of people talk about like SOPs and processes and metrics and KPIs, but I love the way that you've implemented it into your business. It sounds very to the point, very efficient, and just like keeping it going. I like how you say keep the balls moving. As far as your hospitality business, so how did Radical Hospitality, I mean your podcast, Radical Hospitality Show, start, and what has creating content done for your business?
Yeah. So, I mentioned earlier, like we, during COVID, we built this, what is an ADU? It's actually a tree house, like a big,
Yeah.
Peter Nelson type tree house. So that got us into short-term rentals. At the same time, we were doing micro resorts and boutique hotels and all these kind of commercial versions of Airbnbs, packaged underneath the boutique hotel, envelope for clients. And what I loved about that, it was kind of the next scale up. Is you take the short-term rental, and it's kind of the multifamily version of short-term rentals. And so we started about 3 years ago on this red hotel project, and it started out as we were going to put an architecture and real estate office on the bottom with some Airbnbs above. As we got into learning about the business, developing out a hotel business plan, looking at the performance and what it takes to actually manage and run one, we decided it was better to maximize the lot and the opportunity for the hotel space, and keep the architecture and real estate out of it. So it just blossomed into a full-blown boutique hotel. And so I know what I don't know, or I've learned what I don't know, and we are really good at designing hospitality spaces, helping deliver those for clients. But I had never run a hotel. And so we worked to get in, great partners in the areas that we didn't have. And so that looked like, first learning how to raise capital. And so attended some capital raising events, learning how to put together a boutique hotel business plan. So we hired consultants that, specialize in that. I joined a mastermind group that focuses on boutique hotels. Began doing a lot of one-on-one, just Zoom conversations with other boutique hotel owners. And as we were having those conversations, I realized, well, hey, I'm learning a ton here, because I'm like the ultimate beginner, like asking questions. Somebody else is going to benefit from these questions. And most of these people I'm asking questions on are probably future clients, because I can help them with, we talked earlier about the skill set and value that we can bring, the architecture. And so I just began doing the Radical Hospitality podcast and recording those conversations I was already having. Asking all the questions from a newbie standpoint of how do you create, an amazing hospitality experience and put together a great project. And so over the last year, we've just recorded all those conversations and we're putting them out, as free value to the world. You know, the hope and what I begin to see is as we begin to put out these content, these questions of how do you build an amazing hospitality experience. That is doing just what it should do. It's helping people that are our ideal client, that are asking the same questions, create better hospitality spaces. It's connecting us with people in that space, and we can help them with the thing that we're good at, architecture. So that brings in business to the architecture firm. Um, and the offset of all this is our hope is to do more of these boutique hotel developments down the road. And so by continuing to put out all of this value of how to create these spaces, our hope is when we go to raise capital for our next project, we've built and earned the trust to say, hey, here's what we've done. You've got to watch it along the path. You've built a relationship with us, both virtually and oftentimes in person. When we open up the door again to our next project, it'll be an opportunity for someone who already, has gotten a year worth of understanding, building that relationship, getting value, hopefully help them create their space. And that'll help, grow this portion of the business. So there's a lot of prongs in it. We shifted a lot of our marketing budget where before, we're putting, money into writing newsletters and doing project signs. And honestly, I just feel like this is the best way, this podcasting, where you get the opportunity, we get to sit down for an hour, build a relationship together. When you're looking for a great architect to help build your space, I hope, you'll give us a call. And I'm looking for, a great roofing company, that's in your region. I can share, your information you should talk to Quinn on these things. And so, building those authentic relationships have all sorts of ways of organically, promoting the businesses without having to, say, hey, look at me, look at our great projects, and this is what I do. We're just out asking questions, creating value.
I love it. I love it. I think that it's amazing what the way you can network through the podcasting. Like how you
Good,
can really
good.
like build a network through doing this. It's been amazing having you on here. One last question I always like to ask people is like, how do you use AI in your business?
Oh man, yeah. This is it is very timely, like right now, and we're in this like moment where um, it AI is not taking over every job, but people who are using AI are able to scale and do things faster. And so I have this like internal conflict of like, hey, we've always been early adapters and we want to get in, we want to bring AI in to help uh, benefit our clients, do better work without losing the humanity in it. Um, you know, and so the first thing I'd say is like to our team members, use AI, but don't let AI use you. Go in and for us, that often looks like ideation. And so we have clients that may come with a bunch of different ideas. We always start with this feasibility study where we're bringing in images of what they want to do. We're drawing up sketches, and then we're pushing that up the hill to the next level. So we will often take those things and we'll put them into chat, and we'll use it to create a different type of inspiration image than you would get on Pinterest. This may be like for example, we're working on a micro resort, and it's going to have we're working on their amenity space. And so this last week we drew up the sketch plan of that. We pulled in some inspiration images of they want to do this mod pool and this stage and a few different things. And so I fed it a sketch, I fed it 4 or 5 inspiration images, and then it pulled together an inspiration image of that potential project. So it's showing early what that might look like. and it's much closer than anything you would find online for like, hey, here's what we're looking at. So we use it for inspiration. That's one component. A lot of our staff is also remote and in Central America. They're all, architecture graduates, but English is their second language. And so, communication is just so important. They may be brilliant, but if they say something in a different, context that they would use in their language, that client may not, understand or appreciate, or might lower the status of our expertise. And so, we'll run communication from our team through AI just to clean those things up. I don't know. There's lots of use cases. I think every day you just got to kind of figure out how to control it, how to utilize it, and not let it control and utilize you. So
Thank you for sharing
we'll figure
that.
it out.
What's your vision for the next 5-10 years for yourself and your businesses?
Yeah, so we are super excited about this hotel development. We want to continue to help hospitality entrepreneurs build their dream. And so we are just going all in this space, with the podcast, with the architecture work. So we want to help more hospitality entrepreneurs, bring to life their vision. And then for us, we want to continue to practice what we preach. And we would like to begin planning on our next hospitality project this year. And so in a couple of years, that'll be ready to put out to the world for other investors to invest in alongside of us. So over the next 10 years, we hope to do 10 projects that are an exploration of, great hospitality, great architecture, and we want to invest, and we want to invite people to come along the road with us.
Awesome, Zeke. It was a powerful podcast today. Where can people find you?
Probably the best place is, if you go to our website, it has everything. So therootteam.com, and there you can find links to our Instagram, our LinkedIn page, contact, my Calendly's there. If you've got a project that you're interested in talking about, especially a hospitality project, you can book a call right with me, and we'll hop on and take a look at it. I'll give you 30 minutes of the best value I can bring, and hopefully set you up for success.
Awesome. Thank you, Zeke. Guys, please leave a like, subscribe so you don't miss another episode of Built to Scale. Your support is what helps us grow and bring on great guests like Zeke here. So we appreciate you, and hopefully you got something from today's message. Give us a follow. You can find me at Quinn Vincent on any of the social media platforms. And until next time, keep building, keep believing, and remember, legacy isn't given, it's built.